One thing I do know is that very soon this is a deflationary nuclear bomb. This is the single most deflationary thing ever to happen. Okay, we really are 6 months away from nobody ever needing me. You just need to ask the right question. And I'm like, we are 6 months away from it being able to run a macro portfolio brilliantly. Yes, there'll always be some person who's better, but it's starting to shock me. And I knew this is coming. I've been talking about it for a long time, but now I'm seeing it. I'm like, holy shit. I mean, this is better than 99% of all economists and market strategists that I know of.
Raoul Pal begins by addressing the current macro landscape, particularly the behavior of real interest rates. He points out that real rates are excessively high relative to the underlying economic conditions. Despite the dollar weakening sharply and general expectations for lower rates, the longer end of the yield curve has stubbornly refused to come down. Instead, we've seen a bear steepener, long-term rates rising faster than short-term rates, which complicates the typical cycle narrative.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So real rates are too high, I agree. The dollar has been in free fall. Everything looks like we should have lower rates, but the long end has not come down, and rates themselves, the yield curves had a bear steepener. Does this change? Do we get rates falling in this cycle? I don't think we go to full recession. Doesn't really matter. We've got low growth and inflation's going to be falling for a while now because of the lagged effects anyway. And we don't know whether tariffs are really going to have an impact on the current account deficit, trade deficit, or anything. We don't know. It's speculation still. But why don't people see that? It's a very simple thing. If the stock market's gone up all of the time, and then it's always historically been undervalued, but people just don't understand this. Somehow it feels to me that liquidity needs to be injected directly into the bond market. Somehow it feels like there's a liquidity problem in the bond market that's stopping the usual buyers being able to buy. What I've noticed, Alex, is they seem to have an anchoring bias to 1929 and 1930, and they can't shake it. I had it in 2008. I thought there's going to be another leg lower. We're going to go down the kind of 80%. But most people anchor on that, which was a once in history event. And so every time it goes down, they still think it can halve again and halve again. I think narratives are one of the most misunderstood things in macro. I didn't really realize how these narrative shifts are so powerful. I try and step back and look at when the narrative is overly intense versus the reality of what price is saying. And as you said, like 2020, the narrative gets really bad. I think the narrative is overdone here and now. We'll wait and see. It's like the narrative over tariffs. Pretty much everything that comes like this never really amounts to anything bad for long. But yet everybody extrapolates. The world's changed. It's all broken. Nothing's going to work anymore. And they're so quick to do that. And that narrative feeds on itself because fear is a powerful narrative and people share it. It's weird. We found that, and have never realized this, that gold just follows with a month's lag financial conditions. And financial conditions leads liquidity, leads crypto, leads all of the other things. So gold is kind of living in current financial conditions. And we classify financial conditions as the dollar, rates, and oil.
So it's a dollar. So you're saying that financial conditions, looser financial conditions lead to higher gold?
Yes. And it's pretty decently highly correlated. It's obviously not.
But financial conditions are not terribly loose right now because of the higher rates and the fall in stock market.
It's the dollar. No, forget the stock market. That's a lag. The one we use is just three variables. And it has the highest correlation, has a 97.5% correlation to the NASDAQ, all of these things. And it is the dollar, rates, and oil. Now, rates have come off a tad this year after going up a lot last year. The dollar has obviously had one of the fastest moves in the shortest period of time we've had in the last decade and a half. And that's really moved financial conditions. And oil obviously came down quite sharply as well. So financial conditions are loosening quickly. And gold seems to be just following that and has done for the last decade. One thing I do know is that very soon this is a deflationary nuclear bomb. This is the single most deflationary thing ever to happen. And
I would agree with this. It does appear to be that way.
Yeah, and that will play out when that starts, when people really realize how deflationary it is, when every lawyers charge $600 an hour and it goes to $29 a month or $20 a month. I mean, that's insane deflation at the most premium part of the economy. Friday, the new O3 model came out with a deep reasoning. It is ludicrous. It does probabilistic future analysis of macro.
Yeah.
And it will break down all of its logic and why it got there with references. And I'm like, okay, we really are 6 months away from nobody ever needing me. You just need to ask the right question. And I'm like, we are 6 months away from it being able to run a macro portfolio brilliantly. Yes, there'll always be some person who's better, but it's starting to shock me. And I knew this is coming. I've been talking about it for a long time, but now I'm seeing it. I'm like, holy shit. I mean, this is better than 99% of all economists and market strategists that I know of. We saw that in 2022, right? So the market's going down. Normally, you would replace, and the economy's slowing down. Normally, you'd replace it with liquidity, but you can't because of inflation is high. So that is that conundrum, and it passed pretty quick, and eventually liquidity did come back and the market recovered. But you could see that period is very difficult to deal with.
Moving on to the commodity complex, Raoul sees copper as a long-term bullish story tied to the inevitable expansion of electricity demand. While short-term cycles, particularly a slowdown in China or broader industrial weakness, could create headwinds, over a 10-year horizon, he expects copper prices to climb substantially. However, Raoul issues a note of caution, the importance of buying commodities during periods of low prices to maximize returns. He favors a strategy of buy low, sell highest, underscoring the need for patience in commodity investing.
Well, I would be careful of there's not being what I call a tautological correlation. Because gold is clearly correlated to dollar because it's gold denominated in dollars. What I would like to look at gold and euros as correlated to dollar.
Yeah, so we looked at the correlation of them individually as factors, and we found combined was better than individually. So anyway, that's my current thinking is, and I'll write about it this weekend, is it's to do with financial conditions.
Or you can just say that there's more buyers than sellers.
That's true too.
But there was clearly more buyers than sellers of gold. It is interesting, gold mining stocks were doing well, but lagging gold performance. And silver is lagging, and platinum is really lagging.
Yeah.
And my experience with platinum and palladium is that you just have to be patient, and one way or another, platinum will go to 3,000 as well. But you have to be really, really patient. It's like a decade-long trade you're talking about. But those trades, however, do give adequate return on capital. If you bought palladium in 2003 at a couple of $100, you would have watched it go to like 3,000 almost 3,000 over the course of next, 15 years. And it would, I don't have like the exact years right now, and it would be a really good return on capital.
Yeah, the annualized return over time would have been fine.
Yeah, so this strategies of trading the platinum palladium complex have been yielding good results. You just have to be extremely patient. And silver, I think silver has space to go, obviously based on historical patterns. So, and cryptocurrencies obviously have space to go. I don't have like I'm not a very passionate about like hyper Bitcoinization or anything like this. It's more like just look at the historical charts. What are the range?
Do you trade it for the fund, or do you just hold it yourself?
I can trade it for the fund. Yes. Right. I don't like discussing my specific positions, but I definitely have the availability to trade it for the fund.
But you have the ability to, or you hold it yourself.
Yeah. So I have the ability, and I can express the pros and cons that I see on crypto as much as on gold or silver, right?
Yeah.
Like I can tell you the big picture of what I'm thinking about there. But what I'm saying is like being long dollar for against something versus like China could be offset by, if you have the appropriate view, by being long hard assets.
And what about the commodity complex like copper, stuff like that, which is a trade that's on everybody's radar screen? And also, what about equities?
So for me, copper is an interesting trade because it's a trade like it's one of those trades that I'm fairly confident that if you go see through all the cycles, see 10 years forward, I think copper has much higher to go, because I don't think they will cancel electricity. And I don't know if they will have transmit all the electricity through microwaves beams yet 10 years from now, but the need for electricity is increasing, and I think they probably will need copper. In the next upswing of the cycle, copper could go probably higher in price. And meanwhile, however, the counterflow is that if you do think of like China slowdown and global cycles cyclically, there could be some headwind to copper because it's an industrial metal, it has a strong industrial component.
So you'd rather buy low, sell high?
I'd rather buy low and sell high, yes.
And equities, any strong views here or not really?
I'm leaning negative on equities. I've been negative equities for a while now. Probably, I don't like being overly short stock market.
No,
it's a very thing
we
for me.
all learned that lesson.
But you know what? However, I remember there was a convention, some kind of investor convention around 2018, I think, maybe like even before that big correction in 2018, right? And I remember I was giving some kind of presentation. I was in front of 100 people or whatever, 200 people, and asked them, hey, raise your hands if you think that within the next 5 years, you have better than 90% chance of buying stocks significantly cheaper than they are now. And almost every hand went up. And I was like, then why are you long?
Regarding equities, Raoul remains cautious. He's been negative on stocks for some time and prefers not to short the market aggressively, having learned hard lessons from past volatility. He recounts an investor convention in 2018 where nearly everyone expected a significant opportunity to buy cheaper stocks within 5 years, a powerful reminder of crowd psychology and the risks of being long equities when valuations are rich. Ultimately, Raoul's message is one of selective optimism, tempered by deep macro awareness. He sees opportunities in hard assets like gold, silver, copper, and crypto, but stresses the need for patience, discipline, and a clear-eyed view of how narratives distort reality. Please like and subscribe.